Welcome to Real MVPs, the channel featuring ordinary people doing extraordinary things. Let's check out this week's Real MVP. To close out my presentation on Credit 101, we're going to discuss how to manage your debt. We'll discuss financial problems, co-signing, delinquent accounts, settlements, bankruptcies, and debt management. If you're experiencing any type of financial difficulties, the bank is the last place you want to contact. Here's what to expect if you do contact them. If you call them and tell them you're unemployed and you want some help on your high interest rate that you have, this is what they're going to do. Say, for example, if you have a credit line of $20,000 and you have an existing balance of 12,000, what they're going to do is they're going to cut your credit line from 20,000 down to 13,000. So they're maxing out your credit card, so you can't use it again. And as I expressed earlier, that's going to be a negative on your credit score because you're decreasing your credit worthiness, and now you have a maxed out credit card that you can't use anymore. That's what they're going to do. Do not call the bank and tell them you're unemployed. If your interest rate is high, they're probably not going to reduce your interest rate. If you have a premier card holder, the premier card holders, they have different departments. They have a different department, and I'm not exactly well versed on exactly how they handle those card holders. They may give you a reduction depending on if you have a high balance account. It's a possibility that you could get a slight reduction in your interest rate. But be careful. A lot of people call in and they threaten. Well, if you don't give me a lower interest rate, I'm going to close up my account. That's a negative. Do not close up your account. You're only hurting yourself. You're cutting your credit worthiness. That's what you're doing when you close up a credit card account. We already discussed the balance transfer game. Some people have said they called in and threatened to balance transfer it. Well, that's what you should do. Don't call up and threaten. Just go ahead and just balance transfer the debt, because the bank is not going to give you a lower rate. They need the money. They make money on interest rates and fees. So there's no way they're going to give you a lower interest rate just because you're having some financial difficulties. And don't even mention the word financial difficulties, because they're probably going to go ahead. They may even just close up your. Some of those collectors, they'll just go ahead and close up your credit card account. Do not call the bank. Only as a last resort do you want to do that. If you're going to co-sign for a loan for a family member, spouse, or significant other, be prepared to make the payments if for some reason they're not able to make those payments, because if you don't, your credit is going to be ruined. Trust me. I promise you that. I've seen it time and time again. Your child, you become divorced, you and your significant other break up, and there you are stuck with the debt that you cannot afford. You need to seriously think about this. What does love have to do with it? Okay, seriously. Like I said before, nothing is guaranteed in relationships. I would make sure that you get every single statement and you stay on top of it. Like I said before, if you're not able to pay off that loan, you need to just seriously consider this. Seriously. Because your credit is at stake. That's all I want to say regarding that whole subject. Regarding delinquent accounts, we touched on this earlier when I was discussing the 85-year-old woman. And as I said before, you want to avoid 30 days late if at all possible. Of course, you're going to get the late fee and you're going to get a hit on your credit score. And as I said before, the only way you're going to get rid of that 30-day delinquency is if you did not receive a statement or if it's a bank error. And they do make errors at the bank. I know because I fixed a lot of them. So just scrutinize your statements every month. A lot of people just don't even look at those statements. Scrutinize your statement every single month. Make sure you do not get any 30 days late because you're going to get penalty pricing on your finance charge, and that's going to kill you. You're going to get penalty pricing. They're going to reduce your credit line. They might close your credit card account depending on the circumstances. You can the penalty pricing could send you, and the reduction of the credit line and the penalty pricing that can cause you to go over limit the next month because all of a sudden your interest rate went up higher, so your minimum payments got to be higher, and so that could cause you to go over the limit. Then you're going to get over limit fees every single month, and so it's extremely important. Never ever be late if you can help it. Do not go over your limit if you can help it. You need to be very, very careful. If your account is delinquent and you're getting these late fees, your interest rate went sky high, and you're also getting over limit fees, don't call the bank and ask them to close your account because you think the fees are going to stop coming, the over limit and the interest rate. That's not going to change anything. Even if your account is closed, you're still going to be getting late fees every single month if you're a day late and you're $1 short. If you make a payment and it's not the minimum payment, you're going to be late. You're considered late, and you're going to still be getting these late fees, even if your account is closed. As long as you're over the limit, you're going to still be getting over limit fees, regardless of whether your account is closed or not. A lot of people call up expecting the fees to stop if they close their account. No, those fees are not going to stop when you close your account. They're going to keep occurring as long as you're over your limit and late every month. And like I said before, if you're $1 short, that's late. If you make a large payment one month and you expect it to count for several months, you've just made a big mistake because that payment is only for the month that you made it for. It doesn't count for several months, and you'll end up having a delinquent credit card account and in some serious trouble. Your interest rate's going to be sky high, and everything else is going to apply that we just discussed. So please be aware of that. The payment is only going to count for 1 month only. You can't pay up in advance. If you get to the point where you're just at the end of the rope and you're ready to just go ahead and toss in the towel and you just want to hurry and just be done with this debt and you don't care about the repercussions and you want to make a settlement, I'm not sure about the banking industry, but Bank of America will not do a settlement on a current account. It has to be delinquent before they can do a settlement. So don't get mad like a lot of people do when they call up and they want to settle on a current account and then run out to you and go to one of those debt settlement companies or a settlement attorney, because the bank does not do settlements with settlement companies or settlement attorneys. What those settlement attorneys do and the settlement companies do, say for instance, if your account is up to date and current, what they're going to do is have you send them some payments. And they're going to wait until your account is in charge-off territory to try and make a settlement with the bank. And then the bank's just going to refer you to their attorney. And then you got legal problems as well as you've already ruined your credit. Okay? You can do the settlement yourself. It's very, very simple. All you have to do is wait till your account becomes at least 30-day delinquent. Then you'll hit the 30-day delinquent, what they call bucket first. And in that 30-day delinquent bucket, we're supposed to start at an 80% settlement. Okay, they're set up to do an 80% settlement. That's what they can sign off on, an 80% settlement. Possibly a manager can sign off on something lower, but normally that's about all you're going to get is about 80. Probably there was 80% then. It could have changed now because I haven't been there in a couple of years. Then the next bucket is what they call 60 to 90-day delinquent. Then your settlement negotiation will go down to the 70 to 60%. Then if you become, say, 120 to 180-day delinquent, you're in charge-off territory. Then you can get even lower settlement on your account. Of course, the settlement is going to be a negative on your credit report. Your score is going to drop down. It's going to have a negative impact on your ability to get credit because, after all, who wants to extend credit to somebody who walked away for some serious debt? Okay, and that's going to stay on your credit report for the next 7 to 10 years. So just think about that. Okay. The thing to consider when you regarding debt settlement companies and settlement attorneys, not only will you be facing legal issues, but the bank could possibly and probably will sell your account to an outside collection agency, and you know they're going to dog you for the rest of your life regarding that debt. So then you're going to have them to deal with. Don't use those companies and attorneys. Do it yourself. It's extremely simple, and you'll save some money in the long run as well. If you don't want to do a settlement and you want to try and do something with your debt, however, the bank has what's called a fixed pay a debt management program. And if you don't qualify for that, then they'll refer you to one of the outside consumer credit counseling agencies that have their debt management program. And they're designed to help you and not profit off of you. So you want to go through their referral as opposed to maybe going through the internet or something like that, who want to try to make as much money as they can off of you. You will, of course, have to close up all your accounts, and you're going to take a hit on your credit score. In order to qualify for the bank's fixed pay program, they're going to have to do what's called an income statement. And they're going to find out, they want to know what is your current income, your rent, phone bill, utilities, if you have a cable, satellite, or Netflix account, probably, how much you're spending for clothes, food. You have any medical expenses, car payments, car insurance, or any other insurance? And you need to list all the money you're paying on your outside debt. If all your debt, and they're going to subtract all your debt from your income, and if it's a negative, you're not going to be able to qualify for that internal fixed pay debt management program. You have to be a positive. You cannot be in a negative. If you're in the negative, they're going to refer you to an outside credit counseling agency, and they're going to advise you what your options are. Probably they're not supposed to tell you, but probably your option is to go ahead and file bankruptcy. If you do qualify, of course, you're going to have to cancel all of your other outside credit cards. Possibly, you may be able to keep a low balance business card, possibly, but you're going to have to close up all your credit card accounts. They'll put you on a 5-year. They're going to set you up on a program at probably about a 2%. It was about 2% last time I was there, and it's designed to pay off the credit card in 5 years at that fixed new payment they're going to give you based on that new 2%. Okay? I want to add one last comment regarding the fixed pay program. Although your account is going to be reported as being closed, which is going to be a negative on your credit score, the bank will be reporting to the credit bureaus that you are paying as agreed, which will be favorable because your credit score will start going back up. Okay? Last but not least, you can always file bankruptcy. Don't feel ashamed. I've heard this time and time again. I don't want to walk away from my debt. I don't feel good about that. I wasn't raised like that. Just think about Donald Trump and other wealthy people. They have no problem filing bankruptcy whatsoever. There's no shame in their game at all. They'll file bankruptcy in a heartbeat. Corporate America, General Motors for one. Remember that? Not too long ago, they filed bankruptcy. Okay? So please, don't feel any shame in filing bankruptcy. Just remember the wealthy people in corporate America, and some of their shenanigans are probably the reason why you have to file bankruptcy anyway. And so bankruptcy is going to give you a chance to possibly clear your debt. You'll get a fresh start. It's going to stay on your credit report for 7 to 10 years. However, you get a chance to start all over. I had my older sister. I remember way back when she filed bankruptcy. Hey, not too long after that, she improved her credit. She ended up buying and selling 3 different houses over the years. So, by all means, file bankruptcy if the credit counseling agency gives you that, tells you that's your only option. File it immediately and hold your head up high.
Thanks for subscribing and referring your friends and family to Real MVPs.